In this example, we are going to look at a comprehensive problem that covers all the content from chapters 1 to 3. This problem will be very similar to one like you did in your homework last week. So question 9 on the week 3 homework. Several students indicated this week that this was one of the things that they wanted to review and to see. So we are going to first record transactions, and then we're going to post those transactions in the T accounts and then prepare the unadjusted trial balance. So I did notice that a lot of questions I was having about the homework problem that is very similar to this is that a lot of students were skipping the posting to T accounts before doing the trial balance. So they were trying to create a trial balance just off of journal entries, and there were a lot of frustrations with that. So I would suggest don't try to skip steps. If the assignment says, then go to requirement 6 and fill out the T accounts, there's a reason for that. You want to go to requirement 6 and fill out the T accounts because pulling information from the T accounts is a far easier way to prepare trial balances and financial statements than trying to put those account balances together based on journal entries. So we have journal entries. We have this company that has started on the 1st of July. And what we're going to do here is we're going to go through each one of the journal entries. So we'll start with the entry on July 1st, where we received cash in the company. So we have cash of 30,000, and we received a building of 150,000, and then in exchange for that, we issued common stock in the company. And remember, our debits have to equal our credits. So 30,000 in cash plus 150,000 in our building means we have 180,000 in common stock. Okay. Um, so if we were actually in a business recording journal entries, we would post to the T accounts every single time we did a journal entry. So we wouldn't wait until all of our journal entries were done and we needed information to make financial statements. It would actually be something that would automatically happen as soon as we submit the journal entry. So let's just go to our T account. So on July 1, we have a debit to 30,000 in cash. In there. Um, just format all of these as a number with no decimal points. We have a building. So we're going to debit buildings of 150,000. Again, going to their number. Okay. And then we're going to go over to our equity and record that credit in our common stock. So July 1, we have credit of 180,000 in common stock. The second journal entry on July 2nd, we rented equipment by paying 2,000 cash for July rent. So July 2nd, we paid rent. So we have an expense that was recorded. The cost of it was $2,000, and we paid out 2,000 in cash. So we'll go to our T account. Now we have a rent expense here, July 2nd. Our debit is to rent expense for 2,000. I'm going to make all of those be numbers. And we have reduced our cash $2,000. So if I want my balance to update, what I'm going to do is I'm going to copy this formula down so it automatically updates. And oh, I messed that up when I put the comma in. Debit minus credits equals the balance. Now I can pull it down and it'll work. That's what I get for. Oh, so that didn't actually work. C5. The balance minus credits. There we go. Okay, next journal entry. July 5th, we paid $2,400 for office supplies. So we have gained an asset of office supplies. So our debit is to our asset account for $2,400. And we paid out cash of $2,400. So the date on that, July 5th. And we now have office supplies. Nope, date. July 10th, we paid $7,200 cash for a 12-month insurance policy. So that is an asset called prepaid insurance. We debit prepaid insurance for the amount of the policy, $7,200, and we have cash out of $7,200. So July 10, cash out of $7,200, balance minus our credit, and then our prepaid insurance with a debit of $7,200. On July 14th, we paid employee salaries of $1,000 with cash. We have a salaries expense as our debit, and we paid cash of $1,000. Record July 14th. Cash out of $1,000. Our balance, previous balance minus our credits. And then we now have a salaries expense. That was our debit of $1,000. Okay, on July 24th, we collected revenue. So it's July 24th, we received cash. So cash in, cash is our debit for $9,800. And then storage fee revenue is our credit for $9,800. Okay, so this is July 24th. We debited cash for $9,800. So now we need to take our previous balance plus debits minus credits. Oh, minus credits. And we have our new balance. And we have our first revenues we're recording on July 24th of 9,800. So we have a normal credit balance. So that balance is going to be credits minus debits. Now we're to July 28th, where we paid employee salaries again. So that is going to be the exact same entry as our July 14th salary payment, with a debit to salaries expense of $1,000 and a credit to cash of $1,000. We record July 28th. Okay, where current balance minus credit, and our salaries expense of $1,000. We get the balance plus our new addition of $1,000. Just a couple more journal entries left. So on July 29th, we paid cash for repairs to a leaking roof. July 29th, we have a repairs expense of $950, and we paid cash of $950. July 29th, we reduce cash, $950, previous balance minus that credit, and we record a repairs expense, July 29th, of $950. Okay, now it's July 30th. We're going to pay cash for this month's telephone bill. So July 30, we have telephone expense, and it says we paid $400 and we paid cash of $400. So we record that in our T accounts. We have 30, paid out 400 in cash, balance minus the credit out. Redoing that balance every time we do a transaction is just going to help us in the future. So we have a debit of $400 to our telephone expense. And our last journal entry for July, we paid $2,000 in cash dividends. So it's July 31st. We have dividends of $2,000 and cash of $2,000. Okay. So we're going to record that dividends here, July 31st. I'm going to debit dividends for $2,000. And then we're going to credit cash for $2,000. Okay. So now we've done 1 and 2. We recorded each transaction, we posted in the T accounts, and now we are going to prepare an unadjusted trial balance. We're going to go and do our trial balance. So remember, the trial balance is just the listing of accounts and the balances in accounts. So what we're going to do is we're going to pull those balances from our T accounts. So we have the balance in cash. We have our balance in accounts receivable, 0. Balance in office supplies, is 2,400. Balance in prepaid insurance, and we're just going to go through each one of these accounts and pull the balance from our T account. Oh, it probably helps if I put these on the right side. Common stock. $180,000. We're not going to have anything in retained earnings yet because we're in our first month. Income summary is empty also. We haven't done anything. Dividends has a debit. Okay, storage revenue is a credit. So also making sure that we're pulling to the right side of the trial balance. And then we have our expenses that we're going to pull. So our salaries expense, balance, depreciation expense, which several of these are going to be zero right now because those expenses get recorded with the adjusting process. So insurance expense is also going to be zero. Our supply expense right now is zero. Repairs expense, balance of 950. Rent expense. So I have rent expense twice. Let's look at that. Trial balances. Nope. Okay. Just making sure. It's because both those and salaries expense are 2,000. Okay, and then the telephone expense. It's our last expense of 400. Okay, now we are going to do totals of those rows to make sure that everything matches. Okay, also going to format right now. Okay. And then if our trial balance balances, which it does, we can move on to adjusting entries. So we'll move on to adjusting entries because we balanced. So we have 5 adjusting entries. So we're going to look at, first let's look at depreciation expense. So all of these take place on July 31st. So, oh, I see I typed the building wrong again. Okay, so we are going to record depreciation expense of 1,500. And then remember that adjusting entries never involve cash. So here we have accumulated depreciation building for 1,500. Okay. Prepaid insurance has been used for a month. So we're going to record our 2/3 of a month insurance expense, and we are going to reduce prepaid insurance. So for that amount, that 12-month policy was $7,200. So we're going to take $7,200 and divide it by 12. So if you take 7,200 divided by 12, you get $600. Then we need 2/3 of a month because we bought that policy partially into the month. So what we're going to do is we're going to take that times 2 divided by 3, which is 0.66 repeating 6. Calculate that out, you get an insurance expense of $400. Okay. Next, at the end of the month, $1,525 of office supplies are still available. So what that means is we need the final balance in our office supplies account to equal $1,525. So we're going to go to our office supplies expense and look at what the current balance is, and it is $2,400. And we need the ending balance to be $1,525. So the amount here is the difference between the two. So we're going to take 2,400 minus 1,525, and we get $875 as our supplies expense. Okay. Then we have revenue that we earn that hasn't been billed. So we're going to have an accounts receivable of 1,150, and we have storage revenue of 1,150. And then we have salaries expense of $100 because our workers have earned money, but we aren't going to pay them until the next month, giving us a salaries payable of $100. So those are our adjusting entries. We're going to record those to our T accounts so we get updated balances. Okay, and then I'm going to show you how to get an adjusted trial balance using Excel. So we have first we have depreciation expense and accumulated depreciation. So we have accumulated depreciation July 31st, and we have a credit of 1,500, and we do want that be 1,500. Okay, and then I'm going to get rid of. Okay, and we're going to record a depreciation expense of $1,500. Okay. Then adjusting entries, insurance expense and prepaid expense. So we're going to have insurance expense of 400, debit of 400, and then we're going to reduce prepaid insurance, $400, to show that we use a partial month. Next is our office supplies expense. So we're going to credit office supplies for $875. When we subtract these, we should get a balance of 1,525, which is what it said our balance needed to be. And then we have a supplies expense of $875. Now we have accounts receivable and revenue. So we have accounts receivable now of $1,150. And we have revenues of $1,150. Okay, so one more, salaries expense. So we now have salaries payable. So we come over to our liabilities on July 31st, we recorded a salaries payable. And then we also have a salaries expense. Okay. So if we go back to our directions, now that we've done the adjusting entries and posted them to the T accounts, we can prepare an adjusted trial balance. So I'm going to show you how to do that using the worksheet. So with an adjusted trial balance, we're going to put our entries in here. So the changes that we made to an account. So, and we want that to be 0. Well, this is what I get for pulling from and then changing. We need a couple of these to not change. Okay, what else did we change? New stock, buildings, insurance, dividends, salaries, expense, insurance. Oh, that's the one. Okay, now we're back equal again. Okay, so now we have our changes. So we increased accounts receivable by 1,150, and we also increased, then the credit on that side is to our storage revenue. So 1,150. We have our salaries expense, which we added 100, and then we have salaries payable that we added 100. Okay, so that's 2 of the adjusting entries here. Okay, let's look at the supplies. So now we have our office supplies that we credited for 875, and then we have an office supplies expense of 875. Okay, and insurance. So we had insurance expense of 400, and we reduced prepaid insurance of 400. And then the last one is depreciation expense. So we recorded a depreciation expense of 1,500, and we put that in accumulated depreciation. Okay, so now we check our debits and credits. I'm just going to copy that formula over. They equal. Okay, so now what we can do to make our adjusted trial balance is just pull the information from over here. So debits plus we're going to add any changes to the debit and then subtract for the credit. So this is for the asset account. So this is to get the new balance for the asset account. So I'm just going to pull down and for asset accounts. Okay. Then on accounts that have a normal credit balance, I'm going to take the previous balance plus any changes to the credit side. And we're going to pull those down. Okay. So then our dividends, we didn't make any changes to. We want our storage revenue to add the credits, and then we want all of our expenses to add the adjusting entries from expenses. So pull that all the way down. Okay, so if we did that correctly, our adjusted trial balance should be complete. Okay, this should be the current balance in all of our accounts after adjusting entries and posting entries. And we have our full adjusted trial balance. Okay, so now what is left are financial statements and closing entries, and we're going to put that in a different video.